All right, traders, welcome to today's recap. This is Christian from Tribeca Trade Group, and it is Friday, February 21st. It's the end of the week, so we will go through and recap the weekly performance of all the indices in the sectors. Of course, I have in front of you what the performance was for the day. We'll recap that a little bit, and we'll talk a little bit about the dip that we're seeing, some of the things that I've been talking about for the last week or so. Value versus growth. Well, some charts really kind of uh, verified what I was saying over the last couple of days, that there was a big stretch between growth and value, and that tightened up a little bit today. So you can make your own conclusions once I show you those charts. But and then of course just thinking about next week and some of the things that could happen. So that's what you could expect from this video. I'll try to keep it as short as possible, but clearly there's a few things that I want to talk about end of week, right? So of course today, and here's our risk disclaimer: everything that we're talking about is for information purposes only, not giving out any advice or recommendations, anything like that. So of course, the major headline stuff is that the coronavirus and spreading, to basically other countries. There's more headlines about Italy, Iran, a few cases in some other countries as well that I think are really alarming people about the spread of this. So it is what it is. I'm not really going to go too much more into detail about that, because I'm not a doctor and I'm not a scientist who studies these things. So, for now we have to trade the price action, and things, of course, as we've been saying for weeks, could get better could get worse before they get better. And the other thing that I think is not interesting, but I mean, at some point there's various companies that are working on a solution, healthcare companies that are working on a solution. Now, it may be a long time before they develop something, but it does have the attention, and clearly there's been a lot of call activity in names like Gilead, which are trying, I think, at this point to produce something. But we'll see, and I think that's really the only thing that we could say at this point is to control what you can control, and manage your risk appropriately, and know that the more that there's headlines about this, there's going to be some knee-jerk reactions, right, to fear, right? And that's basically sometimes how markets react. They react to fear and uncertainty. And there's always uncertainty in the market, but there's different levels of uncertainty, and uncertainty scares people. So, I think that is what you want to keep in mind a little bit with this. So, that said, I wanted to spend just a couple minutes on that, but to talk about the price action. Of course, the Qs got hit the hardest today, down 1.9%. I think most of the price action that you see in front of you can be characterized as risk off. Bonds were really strong today. Where did they finish? Up 90 basis points. So I should have that in green, as well as gold. So that's telling you, right, at least in the short term, that there's some fear in this market. When you see bonds and you see gold move up like this, now there's other factors at play here, as well with bonds, but and that could be a whole nother video, right? But I think for the time being, you could basically just chalk it up to right now is that it's risk off when you see and a flight to safety when you see bonds and gold up that much. Okay, so and of course when you break it down in sectors, gold miners, things like consumer staples, they outperformed. Also, healthcare was in there too. And again, these can also be associated with a lot of value as well. On the underperforming sides, of course, semiconductors got hit the hardest. Clean energy got hit hard today. I think most of that is because of First Solar, really disappointed on their earnings. And then again, you have the oil companies down again, which has just been the theme throughout the last, at least the last year, but obviously going forward more than that. Software and FANG stocks got hit. It's funny, whenever we get one of these pullbacks, right? It's usually what happens is software and some of the higher growth areas, they get hit first. why do they do that? Even though they really have less exposure, if you think about it in terms of virus. Well, because they're just high growth. They've gone up a considerable amount, and they always get hit over the head first. And we did see a big put buyer in the IGV ETF yesterday, and I think I mentioned that in yesterday's video. So let's talk about some of these things, right? Growth and value. Again, this is something that I've been talking about now for a while. How buried this value relationship has been to growth, right? I've used adjectives like stretched. Growth really, got way ahead or way over the tips of its skis in terms of how far growth has gone over value. So the last couple days, we've started to see that as a rubber band. The other analogy that I've been using is, basically how a rubber band gets stretched, and it's going to snap eventually. And I think that's what you have in the market right now. And if you look at, so this is large cap IWD, IWF. If you look at small caps as well. So before I change this, I'm going to show you that one as well. But could this have more to go before it checks back to the 50-day moving average? It could, right? It doesn't always check all the way back, but you could see, that this really got extreme in relationship to other times when growth has outperformed. Remember again, the big move back in September of last year where value outperformed for about a month. Now, this could be a further catch up because it's still I don't think it's completely closed the gap. Does it have to close the gap completely? I don't know. I don't have the answer to that question. But it definitely could. So next, the other one is small caps, and you could see the same type of relationship going on there over the last couple days. Is that value has outperformed growth, and if you look at the two performance, again, we're talking about relative outperformance. So one doesn't necessarily have to go. One doesn't necessarily have to go up, and the other one has to go down. I think in this case, IWN and IWD just didn't go down as much as the growth. Right. So again, this is still very much buried below the 50-day moving average. So again, you could see a further snap here. So it could just be beginning. We don't really know that. And again, the way that this has this relationship, looks right now, it still looks stretched to me. The other one to look at is, which we talked about yesterday, and again, the last couple days. So again, I hope this helps to kind of look at this in terms of this frame of mind, just to look at how far growth has gone the last couple weeks. So this is IWM versus IWQ, and you got the same thing going on here, right? Just Qs have just massively outperformed. All right, so I hope that puts things in perspective, and if you think. Because I know that one of the stats that's been flying around Twitter is how much smaller traders are now in this market and speculating. So if you are a newer trader, this is quite normal price action. Like what you're seeing today, I know it's a little bit painful when you have a day where the Qs are down this much. SPYs are down 1%, but the market just doesn't go up in a straight line, right? We know that. And it does have pullbacks from time to time, and that's quite normal. So if this was if this was a painful day for you, then it's a day of reflection about what you did to kind of get yourself in that situation. Because again, this is part of trading. We're supposed to go down, up and down, and over time we usually go up. But there's going to be various different pullbacks and things of this nature all along the way. All right. So what else to talk about for today? I wanted to bring up so here's, and I always give you from my thoughts and also like how I traded, what I did, right? So this is I'll go over the performance in just a second for the week, but this is the sheet that I talk about in the weekend video for members, right? And this is like hopefully looking at this is the value that I add to trading, and hopefully this helped you if you're a member. But I had talked about keeping it simple this week, right? So again, this is from the Sunday. The Sunday video from 216 last weekend. I talked about this whole concept that I'm going over now, that growth is extended, and I said, full disclosure, I have been talking about this for a couple weeks, and I said it's really tough to time the pullback. And then what we did next was we looked at sentiment, which was also way over the tips of its skis in terms of the sentiment and the sentiment measure put out by Citigroup, which is pretty reliable, has been in euphoria for the last couple of weeks. So it's been telling you all along that something's not right. Sentiment Trader also put on, talking about something similar to I have, and they also talked about all the speculation and call options and so forth getting way out of hand. So you had warning signals all along the way the last couple of weeks. The difficult thing is, when was this market going to pull back? Because it was like this for a couple weeks. So it's one of those things that I try to provide some guidance in terms of what I was doing, keeping positioning smaller than usual, keeping the number of positions, being very cognizant of how many positions that I had on. And all in all, this week, I mean, I definitely got caught in a couple trades because, again, trying to basically profit from as the market was getting, was going up more and more. It's tough to sit out of those rallies, right? So definitely wanted to participate, and I had a positive week. Today I was down some money, but overall I think I played this, very well, despite putting out a couple trades that got caught. Like I talked about TMO yesterday, which actually fared okay today. So yeah, and my conclusion kind of hit the nail on the head. So I will be doing, of course, another video for members, to talk about strategy for next week. But I think, if you are a member and if you've been listening to these videos, then you had some edge this week in terms of, how I mentioned how I was positioning myself. So again, nice positive week. And the whole goal for me, right, because I'm always going to be positioned a little bit, much more to the long side, unless we're not in an uptrend, right? But the market has been in an uptrend for a while, and of course I'm going to have more longs on than anything else. But my goal is to, when the market goes up, to really profit from it, and on the days where it's down, to not give back much. And I think, a couple of the red days that we had this week, I really didn't lose that much in terms of P&L. So that's my goal. And I think, every trader's a little bit different. Some traders, do more short trading than I do. Everybody's different, but that's what my goal is, to basically, ride the trend for as long as I can, make money as the market is trending, and then not give back too much, in terms of, when the market is not cooperating exactly for me, to be smart when things get a little bit ahead of themselves. All right, so that said, what did I do today? And then we'll talk about this week's performance. But we laid this out this morning in the pre-market session, and I know not everybody can attend the pre-market session, but I talked about, I kind of felt which one I was going to short, but I talked about if we broke value for the day, and this is where we were on the open, down about 30 to 35 basis points, I believe. And I said, if we break value, I'm shorting, I'm buying puts, because the next stop was this version point of control. So I did just that. I did exactly what I went over in the pre-market session this morning. I said, hey, if this breaks, I'm buying puts. And we can look at this in terms of the Qs as well, because it's a similar look here. Here was the break. And right then, on that first break of the value area is where I bought puts. Now, I basically covered them into this for the most part. And I missed this last move down. But it is what it is. No one's perfect. So added some puts. This was at 942. on the break of value, as I discussed in the pre-market session, and then I started covering into the weakness, and then a couple other things we did worked pretty well. For the rest of the day, I looked at where I was finding some relative strength. VRTX, which was mentioned very positively on Kramer's show, got this big move after hours, but it moved all the way down into support. Now, of course, if it hit this VPOC, if it took out this VPOC, I would have added more. Now, it didn't do that, and managed to make some money on this trade today on this move outside of value. 243 up to what, 246 or so. So this worked well. And then there's a bunch of other setups. Regeneron looks pretty good. Look at the move at the end of the day in Regeneron. Notice that it's been had a big move up, and it's been consolidating right on the top of value, and looks like it's ready to go again. The one that I got involved, the other one that I traded today was AbbVie, which also looks pretty positive. Remember, good strong earnings, breakout of value, check back, and I laid out exactly where my stop price would be. I got in on this first green bar, so was able to hit one target on this. We'll see, and hopefully what I would be looking for is if this moves away or above from if this opens up the week above value, would be nice, above 94.50. All right, so that's and that's a couple of trades that we did, but I really like how this IBB chart looks. If we move to the weekly chart, and if we move to the daily chart, notice the consolidation here above value, right? So as long as this holds 122. I think this looks pretty good in terms of biotech. Now, if it falls in here, I don't want any part of it, but I think it has a chance to continue to break out higher here. So that's a group that I'll be watching next week. I think that has me most interested in. Names like Tesla as well. They held up pretty well, in a tough market. Even though this is obviously, I'll use that same word, stretched, it just seems like it wants to go higher. Look at the price action today versus the Qs, right? We call that relative strength. So again, pretty impressive. ENPH was another name that's been super red hot. And look at what this did today too. This also was up, even though First Solar was down like 15% or something like that. So I think there will be some interesting places to watch and to possibly position next week. You just, again, have to be smart with positioning. And, as I've said multiple times, don't get over the tips of your skis with risk at this point. We've had a huge, the other thing is, right, here's the weekly performance, by the way, with gold and gold shining, and TLT. Doing very well, which we got long TLT earlier in the week. But the thing to keep in mind is, even though the market was down 1.6%, as I said earlier, it's normal for us to have to pull back every once in a while. You have to remember, right? If we look at the Qs, for example, which I think if we go to this weekly chart, it is a little bit dangerous how far the Qs have come, especially when you look at this in terms of the futures, right? We've gone all the way through and are doing a little bit of consolidation at this R2 Venom, right? So we've been on a tremendous run, so keep that in mind. This market is still overbought on the weekly, even after, a couple days of decline. So, keep these things in perspective. And also, so I'll get to my plan for next week, but let's just recap the performance. Even though solar was down today with First Solar, it was still up 8%. I think that's the third week that the solar ETF's been up over 5%. The gold miners, they came to action today. They were up big for the week. Retail also did fairly well. Biotech, which I just mentioned. So a lot of sectors were in the green. I wouldn't say a ton, but there were a few, is probably the way to say it. The semis got hit over the head, down close to 4%. Steel names, China Internets, so on and so forth. There was also a lot more areas internationally. You can see emerging markets and international developed markets both were down for the week. All right, so what's the plan for next week? Well, first of all, Friday's what we've seen. I don't have the data in front of me, but it's something like 6 out of 8 Fridays in 2020 have been down. So this is nothing new. It was probably, I think, the worst Friday of 2020, but this has not been anything that's been. This is what the streak has been. Fridays have been bad. Mondays have been better. Could we have a green day on Monday? We could. I think if this ratio continues to close, the value versus growth, it might take till Tuesday. So what's my plan? My plan is if we have another big, another big red day on Monday, is at that point to deploy some capital into some things that have gotten pretty beaten up. If we happen now, again, I don't have a crystal ball. We could end up green on Monday, and I've got some positions that will do well on that. But if we're red, I will start deploying some of that cash balance that I have into some things and trade a little bit more. All right, guys, so that's it for today's video. Again, think of things in context of not just one day, but a couple days, a couple weeks for the month. And I think if you put these things in perspective, it'll help you and avoid some short-term mistakes, which is really what it's all about, too. All right, guys, have a great weekend. You could look forward. Oh, I wanted to show the one last thing. If you go to our Market Webs channel, every weekend what I'm doing as well is pointing out two setups that I like, two of my favorite setups. The first one that I mentioned last weekend was Abbott. This kind of gave a false signal. I did put on a trade and I hit one target on it. This trade is now, I'm losing money on it. I'm still in it. The second trade that I detailed, and I detailed exact levels for you to get into for the bond ETF. So I will do this again, and I think it took a day or two before it triggered. So I said 145.08. I was looking at the 1 hour, right? So let's look at what this did on the 1 hour. And again, the reason why I liked this trade was because TLT is above value weekly, above value, and I talked about in a bull flag or pennant on the daily, and then I just said it needed to trigger. Right, so where did this thing trigger? Well, it stayed above value. It opened up above value, and it consolidated for a couple days until Wednesday, and then it took off. Right, so this was a really nice signal. We set this up again when I sent out the video. TLT was in value, or did not show where it was going to obviously open for the week, but it opened up above, and I had to chase green a little bit, but this thing worked really well, and it's not easy chasing a little bit of green. I think when I put that TLT trade on, it was up about 35, 40 basis points. And I kind of had to hang in it for a little bit, but then it really worked very well. All right, guys, that's it for the weekend or for the Friday video. You could expect a weekend video where I'll highlight more of my thoughts going into next week. Have a great weekend, everybody, and see you on Monday.